All right, good morning. It's Dave Knight here at 123daytrade.com. Thanks for watching. Thanks for being here. Today is Thursday, February 22nd, 2018. It's last Thursday of February, right? So what is going on? We're waiting on the inventory report to come out right now. It's coming out at 11 a.m. CST or 10 o'clock, 11 EST. 10 a.m. CST. So right now it's coming out in about 12 minutes from now. We are trading in between R1 to pivot, and we see that our high has been posted. Actually, it's at 62.13. I just used this because the spike right here was just barely not really well. You can see that 1, 2, 3, 4, 5 bars started at that, and then the rest did sold off in that area. Doesn't mean that this is the high at 62.13. I just put it on there as a reminder that it's there. And then our low right now is at 60.75, so it's roughly about $1 from where we are right now as far as an upward potential of the market and a retracement that's available. Waiting on the inventories to come out. And what we can see on the 15-minute chart, and if we look at our 15 and 5, you can see that we went up early around 8 a.m. and then we've been selling off since roughly the 8 a.m. mark. And whether it's this is the end of the down and then it heads back up, that's to be seen here, right? So here's the high spike bar at 62.13. Not spike, but I mean the high 5-minute or 15-minute bar right there, and then we can see the downward slant of this as well. We can see our 200 bar on the 15-minute chart is located roughly around the pivot, and likewise the 5-minute chart is located around the pivot as well. As a reminder, I cannot trade. Well, I could trade right now if I wanted to because I'm in the combine. There is no rule about economic reports or anything like that when you're in the combine, but you might as well just trade it as like you were trading real money. And notice that I've got, maybe this will make it easier to see, I've moved my horizontal line up to 750 now, as opposed to originally I started that line at 400, then I started it at 500, and now I've moved it up to 750. What I'm trying to accomplish right there is to keep myself away from a non-trending market that really doesn't want to move, and hopefully find better trade signals in the overall trade strategy itself. The inventory trade, though, is pretty much the inventory trading strategy is basically how I think that I need to approach pretty much, I would say 80-85% of my trading. Meaning that there needs to be a catalyst or an event or some form of volume to get me excited to be in the market. And the overriding factor that I've tried to, why I stay in a trade sometimes or get into one, is that I believe the market's going to go a certain direction and then the volume bar will follow if it goes that way. But when you're wrong, you accumulate losses very quickly. So I'm not completely convinced on everything that I do in my trading strategy. Therefore, that's why it's just kind of a fluid type of thing that I adjust and modify. But what I'm confident about is the inventory. This is one of those trading days that I believe that I have a high odds of winning the day. Maybe not that first trade, maybe not even the second trade, but I feel I have the odds are in my favor to be able to take a trade to a 3P target at minimum on an inventory day that wants to move. So the overriding goal is always to take more away from the market than you're willing to lose. You can see today I've got 137 ticks versus 11 on the stop loss. So I always set up for basically a 7P move on any given day off of my charts or my spreadsheet. So basically I look at where 7p is, and then I just adjust for that. That's kind of the overriding goal. Doesn't mean I'm going to get that. Just means that that's where I find that I want to be at any one time. See, I had the wrong figure in that level there, so I need to print that off. But what I do when I first work on the morning is I want to know where the open was for that session. That seems to be an overriding factor that I always want to know. Where was the open, and then where are the ranges that we could possibly go off of that open. I'll be back in a couple. So here's a thought. A lot of times I put on generic music in the background when I'm recording, but now that I'm not in the able to get the AdSense and I can't monetize, therefore I should be able to play any damn thing I want in the background and not worry about frickin' YouTube and its rules of what you can monetize and what you can't and all that crap. You know, it's nice to get paid for your efforts, and that's kind of the labor is worthy of his wages theory that I believe in, and the Bible fully supports. Those that don't know, YouTube's been being a prick lately to creators of content. They deem a person who doesn't have at least 1,000 subs and 4,000 hours of watch time, which translates out to 240,000 minutes, unworthy to collect on advertising profits and revenue of the company, and which is bullshit, because we all know, and they make all this crap about, you know, all this fake account and this account. You know, that has nothing to do with it. They're a corporation that is looking after el number uno themselves. It's not the same company as it was before. It's Google. It's Google now, and Google is kind of that double-edged sword, right? It's good and bad. You know, we use search, we use Google because we do, but we also know that there's problems in paradise as well whenever you deal with the corporation itself, the Google-it, or Google-ism, if you want to think of it as a political entity by itself. So YouTube was a lot better when it was owned and operated outside of the Google. I don't even know where to go with this, but it's just the rant that I'm going to get off of now. But the bottom line is I can probably put in any video or content that I want now in the background and not worry about pissing off the Google police. Or keeping my videos monetized, I guess, is the overriding factor to make pennies on the dollar, right? So I might as well listen to what I want to listen to. Still on a Nickelback kick. So let's get this moving. This is Leader of Man. Think out loud until it's slow. Where's the thing to my brain? You always sound so low. I am not a leader of man. 2 minutes. 2 minutes to Wapner. Do you think I could have a drink? So hard to swallow. Yeah. So hard to swallow.
I touch your hand, touch your face. Yeah, the glass is running out to breathe.
I'm gonna get my water. Yeah. Okay, here we go. Let's rock it out. Okay, less than a minute. Alright. So, wait 1 minute, 1 minute, warm up. High volume hard, 1966. Trading between R1 and R2. R2 is located at 6231. Scan number 6254. I'll turn this down a bit. 6234 is 6254 is GAN, so it's about 50 ticks away right there. $86 to start the sequence. Moving up to 88. I'm looking to go short to start with because of this blue bar volume and also everything I've seen in front of it. Up to 6213. Moving up to 6192. Trying the first shot at 6207. Looking at that high to hold. We've only busted the high by 5 ticks right now. If this one doesn't work out, we will go. This one doesn't work out, we will go to making the market make a 1, 2, 3. $62.07. Initial target is $61.87. Okay, we have an add opportunity at 62.01. All right, so initial target on one contract is a 3P target is 61.48. We use 61.49. GAN signal is 6015. It's a 3P target down here. 2P is located at 68. Got knocked out on 1. So the market wants to break out. All right, closing out. $62.54. There's R2. Let's get rid of this horizontal line. We don't need it anymore. Looking for Wyckoff stopping volume now. All right, so 62.21. Never mind that. I guess this might be the third day losing on this combine. Have to restart. It happens. $62.54 is the GAN signal. Let's see if we can get there. So market, it's topping right here. Taking on that 54 right now. Taking on the Gann number. We're going to lose the combine, and we'll lose it on this one. I'm taking on the Gann number right here at 54. All right, knocked me out. I'm just curious if I would have waited for the 64 to print, if I would have been better off. Well, I've had my fun in the combine. Now it's time to get serious the next time around. So I waited for that 54 to print, since we were so close to it. I think today trading two, taking on two on the inventories is not the thing to do. That's what I've been trying this time around. On my 3 losing days, I've been trying to trade 2 contracts into it, and it's just not physically working out for me. It's getting me knocked out a lot quicker than I want to get knocked out. This looks like a top to me. I think the hardest thing about trading is patience. I mean, I'm good at taking entries. I'm good at seeing things, but I get impatient to get into a trade. I was glad that I collected my money and decided that I needed to work on some things. I still got that $1,000 check coming in. So I went up to 75. Let's see these 2 bars.
With type 2 diabetes, a lower A1C is a lot about choices, but it can be hard sometimes because different sides of you struggle with which ones to make. Well, what if you kept making good ones? Then your numbers. Discover once daily Invokana, a pill used along with diet and exercise to significantly lower blood sugar in adults with type 2 diabetes.
So here's the bar.
Invokana works around the clock by reducing the amount of sugar allowed back into
And it
the
trades
body,
up.
taking some sugar out through urination. It's not for lowering systolic
And
blood
here's the
pressure or weight
down.
loss, but it may help with both. Invokana
So let's
may
go
be
back
used
and
both.
think about this logically
Call your
now.
doctor if you notice signs or symptoms.
And
Invokana
think about
helps
trading
with
signals if I
hydration
wanted to
after
get
you
in.
feel dizzy or weak when you stand up, so be sure to drink enough water. Important side effects to know may include kidney problems, chemical
As I
imbalance,
just
changes in
took
appetite,
whatever
or
I
potential
thought
changes
was
in
the
urinary
right signal there.
acids, risk of fracture, or increases in cholesterol or
So there is
ketoacidosis
the
is a serious
bar.
condition which can be life-threatening. Stop taking Invokana and call your doctor right away if you experience.
You know, hindsight's always right, so just know that when you're looking at it. Was there an opportunity to get involved? Right here, when I jumped in. This is when I jumped in the first. I don't want to take the discretion away from that first trade, but maybe I should. Because this started my sequence right here at 10:02. I wanted to get involved. It went down to here. I added that second contract. That was a mistake. Shouldn't have done that. No, it's not a mistake. It's just, let's take it back. I was trying to trade two contracts into this combine to see. The double-edged sword of that is that you can win quickly, right? And accumulate profits. But the other side of that is when it did knock me out here and here, I was down 22, 23 ticks at that point. So this bar becomes a failure bar, but when does it become a failure bar? Is it a failure bar here? Or is it a failure bar up here? So what area of those three is the long stronger than the short? The first opportunity I could get involved in the trade happens right here. So there is 1 minute. Right there is 1 minute worth of information. So let's get rid of all the horizontal lines I put on. Actually, we can use that one because that's the bottom of the range. Go back to pure basics and say we want to be long above this range. That'd make a 62.05 entry. 61.93 would have knocked us out by a tick. 11 tick stop loss. 11 ticks would bring it to 62.04 or 94. So 61.94 would have been stopped out right there. if not being stopped out, 62.05, 62.64 would be a three-peat up target, and we hit it. Right there. Now if we waited for the market to form, let's start over again. Let's get rid of everything. Let's think logically the way I want to think about this. If I'm thinking short only, but this is not a short, where is the short? Where is the long? Short would be available. Let's get trend lines out. The original short would be right there, below that. And then before we turned around, we have this range. And then our 01 comes in right there. One minute worth of range. I'm shorting right in here. Get that horizontal line going. It's good enough for now. Now volume bars like this can act in two different ways. So this is the decision bar that I used. And you notice that I was trying to short it. But at some point, you can see that this should have obviously been a long. And here's the biggest area of contention I've got in my trading strategy when I believe a long versus a short. And I'm coming to conclusion that these bars are either failure bars, meaning that it's going to continue with the trend, or they are what I originally think they're change of direction bars, which would send it down. This is a change of direction bar. But price action needs to be able to tell me something. Now what I'm good at is finding a top once it's there. but lately I haven't been very good at catching that. The overriding volume, more times than not, sends the market the other direction in the crude oil market. But when it doesn't, then it becomes a strong indication that we've got a trend market moving. And just like the reds come up on a down move and an up move, the blues come out. So I recognize that this isn't the end all of everything. The blues and the reds, although they're significant, they don't work out. When they don't work out, they don't work out. So I've got to be able to change my thinking. Looks like I need to change my thinking sometime after that low. That's right here. And why is that point where I should start changing my thinking? Because if it was going to come down, Wyckoff would tell you, and they come in fives. Now that's my own way of seeing the Wyckoff signal, is looking for volume spikes in fives and then looking for the market to come down. Knowing that this is here, where is the failure? So the original bar is here, and this is the level that we should have been shortened from. And then we're following behind it, and it ends up being right there is a shorting level. Following behind. I would argue that this area right here is where the long is officially today. Now the question is, how do I override my bias of wanting to be short? Or do I stand aside on a day that does not work the way I want it to work? So this Wyckoff signal ends right about this area, and we start trading above that level right in this area. This doesn't stop it. Stopping volume would be right here. So let me get rid of all the screen draw. So this would be stopping volume right here. If this would have worked out correctly, stopping volume, oh, dang nabbit. So here's stopping volume right here. That's your stopping volume. And here's your stopping volume area. So this right there, anything above that is a long signal. We've busted through all of this, and until we would get underneath that mark right through here or through here, the long overrides the short. And this is what I do when I'm working out a trading strategy. I take the losing days and I think, where could I add trade? Where did I see it? Here's your Ziggy, right? I like to draw a Ziggy on the chart, if you know that by now. I like to draw the Ziggy. Here's the Ziggy on the chart saying, you may not pass. You cannot pass. You cannot pass. You cannot go. So Ziggy's on the chart right here. But Ziggy gets beat right in this area. So around 62.20, roughly in that area, is where the long was greater than the short. Right in this area, right through there, 60, I don't know, maybe call it 62.18 or so. Honestly, I'm glad that I'm resetting because I wasn't real happy with my trading over the last couple of days. I can see that some things that I'm doing are correct when it shows up, and others are incorrect when it shows up. The hardest part about the CLPIT strategy, to be honest with you, is when you're wrong quickly. And when you're right quickly. So it comes down to trades. I'm not saying that the way I trade it now is the way it was originally made to trade. If I go back and think about the original thought process, I've got to look back at the 1 minute level. And the 1 minute level would tell me that I want to be long above this area right here. Now I want to be short below this area. So in other words, 1 minute would tell me long above, short below. This was the original CLPIT strategy, and then I've modified it since that point. But the original is long above, short below, a range. And this is dead man's land that you want to stay away from. Did I trade into dead man's land? Yes. I was inside of this right here. I tried right here, and then I added. Now, the add was something I was working on as an overriding factor if I could add or not on a trade. I'm not totally against adding a contract. I just need to figure out where best to add that second. There was no good second signal today. I just kind of jumped the market trying to get in. Basically, long story short, I can tell you what I was trying to do. I knew I was down 1,000, and I was looking to get 2 contracts in to get up over the $30,000 mark in the combine on one trade, to get 50 ticks on 2 and be able to pull out of the hole. So that was the overriding factor of why I did what I did today on the initial entry point. I was wrong, but that's what I did. If the market was going to go down, though, this would have been the signal to send it down, right here. So after it breaks out of that range, meaning right here, this is where the bias should have switched for me from long to short. So this level above this level, in other words, right here when I was shorting it, I should have been looking to go long above. Because stopping volume did not work out. Wyckoff stopping volume here was incorrect, therefore the overriding factor was the market wanted to go up. So here, the way I'm thinking about it, this, and I drew the ziggy on the chart, because the best way of seeing it, for me personally, is a visualization. So here's your rounded top. Here's your line that you want to hold. And here's our failure of holding that line. In other words, Bugs Bunny was at play. And Bugs Bunny, you can't beat them, join them, was above that level. Now on any up, I'm always looking for no more, no greater than 3P. Any day I can get a 3P trade on a long signal, it's a win. The short side of the trade can bring the big profit targets, and that's why I like trading them. It can bring the 7, the 10s, and all the greater numbers. But I only go at the long with one contract. So therefore, if I'm only going longs on one, and the reason I go on one contract on the longs is the market has a tendency to fuck you up. It goes up, it comes back, it goes up, it comes back, it goes up. It might do something like that. So right there can show you it hits you here, it hits you here, or it might do something like like this and get you right there. Now it just longs are, in my humble opinion, are the toughest trades in the crude oil market to hold on to because of the retracements. Retracements in a long signal will kill you because you think, wow, the market moved up 1p, it shouldn't come back down, but it comes back down and then it goes in its merry way the other direction. So it's hard to move to break even on a long signal, even though you want to go there. You want to be at break even because the market's moved up. But the other side of this is when when is the long over? Because I'm believing all this is pushing prices up to send it back down. So if we plug in 62, let's just call it 20, 62.20, we would need 62.79. Looks like we got it right in here. The 3P move today was right in there. So just enough to get 3P. When I originally designed the strategy, when I noticed that the market could move up a 3P range on the inventories. Then I started noticing that the market would make a lot more money going this way. Now I knew this coming into trading because I've been trading long enough to know that ups are hard to make money and the shorts, when they go, are easy to make money. So here's your level that the market's done going up. But how can you wait for this when the market's been going up all this point? Well, that's where I started thinking about Gann. And what does he have to say about it? So if I wanted to take a shot at a short, and I wait for the market to show me, it probably is right in here. So let's go back and through and look if we waited for the market to show us a short or where to close out a long. It's right in here. Right about the 62.72 level. This was interesting when you saw those two. So let's go back and look at volume bars. So here's your failure point above. We've already recognized that above here is where we want to be long. The market comes back to 19 after going up to 31. Original target would have been 40. So here's break even right here. The 2P up move is 59. Run right in here. Goes down to 41. It's like you still would have been in it if you went to 1P on a 2P move. and hits 3P right there. So you would get your 3P target. The thing is that would you wanted a 1, 2, or 3P target? Your 3 is here, but what have you taken out before that? Would you have been wrong to get your profits at that level? I don't think so. At 59. So this move down here, coming back, could have been an exit point, or you could have held here and then held on to get it. So basically, bottom line, I need to become a better long side trader. And I knew that coming into this year. And I've got to have more patience on a long setup before I reverse. When I see volume accumulating, what's going to stop the market from going up? That's the big $20 question right now. $60 or the $1 million question. What stops the market from going up? What stops the market from coming down? What does volume look like to make it stop? Why is this volume bar holding the market where all the others in front of it didn't? Those are the questions. Those are the questions that'll make you the big bucks. If you can answer the whys or have an answer for that, that's where the money is. I guess it's to get in rhythm with the market sometimes too. And then it's the overriding factor of what's going on in the market. Is the market temporarily on a short trend up? Is it on a short trend down? What is the latest swing of the market? And and I'm coming to the conclusion that you want to be trading the swing of the overall swing of a market whenever you get the opportunity to trade that swing. What am I saying? So here's the daily chart, and we can see that we're swinging, but we could have been not swinging right in here. But then we're swinging up again. Today. But coming into today, this could have been the swing down, and this is why there was such a tough trade. Honestly, this is why it was tough to trade today, because we were at a level that the market could have went just as easily down as up. But there has to be a point that you see, and we can see that right now we had this was an up, here was a down, here's an up, and right now currently we're in an up. And we translate it out to when do you see red bars versus when do you see, I look at a smiley face now. When do you see, here's our red bars in here, and then you can see more black than red on this move right here. Just like you can see there's more black than red through here. Right and through here you can see there's more, it looks like there's more red than black. This could have been a good level for the market to come down. Lots and lots of things to think about when you're starting your strategy out. But like I said before, you can't have paralysis from overanalysis either. Could I have traded today better? Oh, always. Always could trade a day better. Why is this level right here, why is it selling off here when I thought the market was going to sell off back here? I don't know. I mean, right now I can tell you that once it busted this Wyckoff stopping volume, the market was on a long side, and there should have therefore been no short signals until volume told me otherwise. Here's another stopping area right through here that it busted through, but we were already in a long, and the market did never come back and show that it wanted to start coming back to the short side. And I think when I really think about this, it has to do with what I would call fake outs. When the market's trading pivot point to S1 and you're trying to trade the short, the fake outs work much better to short when it's in that area. When you're trading pivot point in 1R, in this area, it can work, but it's very hard. And when it's trading between 1R and 2R, fake out should not be taken unless volume is getting up to the point where its capitulation is really honestly happening. And you'll see that with lots of volume, lots of figures, and very quick moving market. So the overriding bias I have right now is that I believe the market's going to come down, and I like the short side of the market. Because it just makes more sense to me when the market's moving down. And where I lose most of my money as a trader is when the market is trading up and I'm trying to short it. And y'all can see it. I can see it. I definitely see it. It's just because I know the market has a tendency, every time I get in a long, it comes back to my point of entry and knocks me out. And I would get so frustrated at that I thought, well, I'm just going to short every time I see something. And now I got to the point where I'm shorting so much, but I'm taking those fake outs in an entry point that I should be waiting for more confirmation to get in. And I know why I'm doing it. I'm doing it because, you know, I'm afraid that that's going to happen. That right there, and then it's just going to go down. And instead of being shorted here, it might go another 40 ticks, and then there I'm coming in at that point. So there's got to be a point. You know, so this is like a 50 tick move between here and here, and I could have been here. It's the woulda, shoulda, coulda side of it. So I know why I do it. I understand why I get involved in the short side trade and try to catch that fake out at the top, because it's the woulda, shoulda, coulda side of that. If I can catch it, then I'm in a really good point with low risk. So if I want to take that on, I've got to find a point that makes more sense, volume related, if I'm going to stay bias short only. So that's the demons that I'm working out in my own self. But I can see that the long was there. I mean, I can definitely, when I was shorting, there was a point where I should have said, you know, it's not working. You know, and honestly, if I look at the short signal, this should have been the short right here. If it would have went below here, then the market would have had more of a tendency to break down below this level right there. So as I look back at the trade session, I'm trying to get short up here, when, in all honestly, you know, maybe I take one fake out signal, and this should have been my add point right in here. So taking this short here and then adding would have been right in here, and then I would have been set up pretty good if the market wanted to come down. So in other words, if I want to take that opening discretionary trade and hit that, right here would have been the point that the market was going to come down, that's the level right here. That's the level it would have come down at. And the add would have been right in here. So to add the get one, get the, so, but to add this contract, the market would have had to come, to get that contract right there. So I should have only been in one, if I want to look at it that way, right here. And then right through here, I'm getting closed out, but let's say it didn't top out here. Let's say it went up here and then went this way. Then the add would have been right here, coming down through here. That's where the add would have been. Being more patient on the add signal. So that's things that I have to work on, right? Because my overriding bias has me thinking short only. But this right here, I can tell you that point right there is the point that I should have been long until the market proved otherwise. So basically, when I got out on that one contract right here, I should have been long above. So that is the way that, and I'm really good, and you see it, you know, all you have to do is go back a couple weeks on the CLPIT strategy. You can see where there's red bar volume, you know, the reds are coming, and I'm shorting it in that market, and I make like, you know, I make a good amount of money on that. But I missed this. But I was able to catch, when I see reds, you'll see me shorting it and getting it. So the blues, maybe it's just a way of I'm thinking right now is wrong. You know, as I'm looking at this as a topping action, and the market is saying no, it's not topping today. It's stop running and it wants to go up. So there's two different ways of looking at it overall. I guess there's four ways really. A volume bar, whether it's red or blue, could either be a stopping point or a continuation of a trend. Stopping point or a continuation of a trend. So there's four different ways of looking at volume, or two ways on each side. And recognizing where it stops being stopping volume and starts being trend volume, that's where I need to be better. So I'll leave you with that thought today as I wrap up the video and wrap up this combine losing 3 days in a row of fake money, still pulling that $1,000 in. And I made that, if you look back at the market, where did I make that money? Where did I make my money? I can tell you where I made my money. I made my money on this move right here. This is where I was able to beat the redevelopment to get in, and here was where I was able to get my money on this move right in here. That's where I was able to pull out the 1K because the market turned over for a little bit and I had my day in the sun. I had Mr. Sunny working on my side for a little bit. So that move right there. And where I made lots of the money in trading account is when you see lots of red. When you see reds, like in through here, if I go back, well, I wasn't trade in August, but I probably would have done really well in August through here. I probably would have done, actually, I think I didn't actually start trading until October. I struggled in October. I started doing good in November. I was doing good in December. I struggled in January. I did good in February, and I'm struggling right now. So let's look at how I've done since I started back. Here's October. I struggled out of the gates. I did good right in here. I did good in here. I did okay in here. I did okay here, and I did really exceptionally well there. So anytime there were red bars on the daily charts, I can tell you that I was winning and making dollars and banking money. What I got to get better at is those days. The overriding factor of what the market is doing. In other words, I need to change my bias as best I can from short to long when the market is showing me more black than red. And I'll leave you with that today. All right, it's Dave Knight here from 123daytrade.com. Thanks for watching. Thanks for being here. I'm going to reset the combine. I don't know if I'll trade Friday. I probably will. I'll probably try it on Friday, see if I can catch something on day one to get out of the gunk, and then look to next week to pull. There's some things that I've been working on the side that I believe that I'm going to be able to implement a little bit better into the next combine. So stay tuned. Talk to you later.